Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording here Saturday, the 11th of April at 9 a.m. Eastern Time. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing Saturday morning?
Doing great, doing great. It's better
That's
than Friday night
yeah,
to
a little more
record.
energy, right?
Exactly.
Yeah, so this week's show we're gonna talk about the fact that the Bulls and Bears have moved back into an area where they're having peace talks, where we spent months and we were neither side was attacking successfully. They were sort of at a stalemate, and we're right back there. And now the question is, what are the key levels to look at to see, who's going to break the peace with force and actually control it. That's the big thing. We also going to go over a couple of the calls we made last week. One was on Bitcoin. We said the key level to watch was in the 68,000 area, and if we got above that, we'd rally, and we did. We talked about crude. If we held above mid 90s, we were in good shape to go higher, and we did. The commodity land we said watch for corrections. The corrections are continuing, so we're gonna get into all those markets and tell you the ones that are ready to go, and most importantly, what are the key levels to watch because we are again at a bit of a turning point. So without any further delay, let's jump in here on the S&P. We can see we're right smack in the middle of all that garbage we spent months and months churning through.
Absolutely. And what a great place to stop. Okay, so let's take a look at what to do next week. We've already talked about the high and how all that came in. It was 45-day move in with 90 degrees in price.
Mm-hmm.
And that came in just a day, one day earlier than where we were looking for, the low to come in, which was April 1st. And we snapped and paused exactly at the 50% level. And you guys can see where that is. It's 66.38. And it's interesting, Monday, Tuesday, we kind of paused right below that. That's exactly where that all that overhead begins. One of the important things to remember if you guys are studying this stuff, normally where market gaps through is usually, that's where the most resistance is. You can't really trade through it. Sometimes you can grind through. It would take a longer time, but gapping through one is common. And here's an example of one. So here's April. After we did the April low, we came up right up to the 90-degree level. And here in this case, it was like 55.63. And then we gapped, right? We gapped through, came back for a retest, held above, and the rest is, gapped again. It was just, but it happens at key levels, right? So it's something to remember. And that's why last week we talked about, well, this is the level to watch, and the important thing is, are we gonna get above and hold above, or are we gonna sort of roll over after poking a little bit, testing a little bit? What we got was, we had the news and we gapped through it. The interesting thing is now we're holding right at that all that overhead. Is this enough? Was that enough of a correction? Which was perfect correction, by the way, 90 by 45. So that part was very good. And this is the resulting move coming out of that square. So the question now is this resulting move is something that we're going to sustain for a period of time, let's just say for the next 45 days, or was it just sort of the first counter trend move? Because if you look at the weekly charts, this is just the first counter trend, just one bar up. And is that it? Well, I mean, this is the big question.
And to throw some more fuel on the fire, we had a Rebel Yell cycle hit Friday. So is that
Okay,
is
well,
that is that signaling the end of this
leg,
this
right?
sort of leg up, right? Is that the end of this
Mhm.
bounce?
And I wonder if that little red bar is an indication of that rebel yell cycle sort of hitting, initiating that. It
Yeah, I mean
seems
it.
like, yeah, go ahead.
I mean that's the thing, right? And is that the end of this? Is this wave two? Is this like an A B C D down? Is it, what is it? And we don't know yet.
But what we do know is what we normally use is to use the pattern with the price. figure out what's possible.
Hmm.
Well, clearly here we need to settle above 68.20. If we can get above and hold above, then we're back in the mix. We're probably going to sit here and churn for a little bit, or go back up and test the highs. That opens up a whole nother can of worms. So we'll see how that works out. But anyway, the upside 68.20 obviously is the key to watch. And if we can hold above, we can expect it to crawl a little higher, whatnot. Let's say we're up for a couple of days and then we cross back down below it. Well, then 68.20 still becomes still important, and it will be the resistance. All right, so that's the upside. To the downside, 67.27 is really the next big level to watch. And you guys remember we've been talking about this level for a while. And the important thing here is that any kind of a correction, even if we go up a couple of days and come back down, any correction that we hold above 67.27, and let's say we reverse off of that, well, that just tells us the market's stronger, and we're probably going to spend more time above 727 and so on, right? So these are the two levels we're going to really watch. Now, if we 67.27 doesn't hold, we come back to sort of fill this gap and retest these levels. So then we have 66.38 level as the big support, the strongest support, I would say. So the thing is, because of this little move that we did, with the gap, now it really is, we kind of flip the script to the side of the bulls in the middle of all of this, right? So the way we have to dissect it is to really look to see where the counter trends come in. I mean, that's the only way we trade. At least be aware where the counter trends are stalling, right? Because if you're going to trade a trend, sure, you can trade the breakouts, but it's much better if you can really nail the counter trend reversals. But that's probably the lowest risk and the biggest gain, right? If you can hold the counter trend lows or the counter trend highs, like on the way down. All right, so that's kind of how I'm looking at this to keep it simple, without getting into too many details. I think it keeps it fairly clear, and we know where the major support is. We know where sort of the balance point trigger is, and then we know which is 67.27, and we know where 68.20 is sort of the key to really see if there are more left in this move, right? We can get above, hold above. There's more juice, probably go higher. So while I mean, the low was good, right? At the time we were talking about the low, we had a number of cycles come in. So that's why we made a big deal about it a couple of weeks ago. It was about to come in. So this is the result. I always talk about going back to the last pivot and go, okay, what happened there, right? So we know what happened up here. We waited a long time and we got the correction. Fine. Then that squared out. Okay, now what? It doesn't mean, the markets have to, we have to make a new high. It just means that squared out. So price and time have to balance. And now we're dealing with the counter trend. So this is going to remain a counter trend up until the highs get taken out, since that was like the bigger high, the bigger cycles came in. But Ben, take a look at this. I want to share something with you guys really interesting. Take a look at this. We came down, made a low here, and on up. And what caught my eye was, I was looking at this 3 days, and I'm like, wow, I wonder how often that happens. Check out over here in 2025, and we had a low here, and gap, very strong. Well, here it's almost gappy because a lot of the move happened during open market, right? So this would have been a
Hmm.
gap, but we just moved higher. But then we had some kind of news here. I didn't go back to check probably. But look, we had a little gap here. Then we came back down, and you can see we kind of did this whole sideways dance for a while till we got the false break right there, and then we had the big move down, right? Then
Hmm.
we sold off. So I thought this three is a little bit of a pattern because we also had one right there after gap. I don't know if there's anything behind it. It's just my eye caught that because I was looking at the three and I'm like, oh, that's interesting. I was trying to see if we had any of the clusters like that. So,
That's good eye. Good eye on picking that up.
well, this is interesting because we kept talking about, well, this is the whole sideways, and it's sort of like analog here, and is this the possible move after the false break? And it very well could be, but you guys are watching cycles, what happens is we don't get continuous cycles. Otherwise, trading would be easy. 60-day cycles aren't exactly 60 forever, right? So, but what cycles do is surface for short periods and they get buried by other cycles that become dominant. So I tend to look to go, look back and check for similar patterns. And anyway, I think that's an interesting one to keep an eye on. Let's see what happens. We'll see what comes out of it.
Like it. I
Cool,
like it a
right?
lot. Let's see what happens
It's
on
cool because it's
Monday.
it's yeah. I mean, here what happened was that ended up becoming a false break, right? I remember
Right.
you talking about that, and that really messed people up because look, false break came back down. Okay, now we have a lower high. Okay, great. One day down, which gets everybody flipped to the other side. We rallied again, flip to the other side, rally again, and then a false break on a new week. And that's where it all started. So
Yep. Then
markets
they
aren't
let
as
go.
clean as when we describe it, it's never clean. And this is why we use price to really figure out place in time. And you can see that's why we have the lines. That's why we use them to sort of leverage. I'll leave it at that. And we talked about the levels. So I think we're good. Let's move on to this is the front month June contract. And we have a 1x2 coming off the high, which we tapped Friday. You guys talk about how we never use Gann lines. Well, here's one, and it's held pretty well, from the beginning. So it's worthwhile watching. We're tapping like the fourth time. Uh, and what happens every time, price touches a Gann line, its price and time is there. Now, is it price and time that's worthy of a turn? Is it a hard number? Is the question. All right, so based on now you guys have the basic template from the cash, right? The SPX we just looked at. Now, if we get down to the June contract, that 50% level we looked at in the cash ends up becoming 67.35 for the futures contract. Okay, that's 67.35. There it is. Let's keep an eye on that. That's going to be the key. Long as we're above that, I would say the market's in pretty good shape. We could have hard downs, we can have take our breath away. But if we can hold that, I think we'll have more upside. Somehow, if we slip through it, obviously, then I think we have a bigger downturn in the works. At least that's the highest probability, I would say, how it is going to unfold. Of course, when we talk about things, it sounds very simple, but the way it could happen is, we could spend a whole bunch of time here, consolidate and then false break and then come down, lots of ways for this to unfold. So price is the key. So watch this. Long as it's above, be a little bit more bouncy than not. And if we get below that, we're a little bit more weaker and gravity starts pulling it towards the lows, right? So let's watch that for next week. NASDAQ, Ben's going to cover NASDAQ, but you can see this 25,140 that we used to talk about is at play again. So I would say keeping the same theme, can we hold above 25,140 or not? And remember that descending triangle that sort of slipped out. So the high, take that horizontal line, that's 25,475. And that's still sort of resistance, and that's the good false breaky area. So I would watch that very closely. And to see if we can hold about 25,140, 25,140, 25,140 afterwards. Here's the calendar day chart. Again, we really got pushed into it. And, looking at pivot level here is 66.43. You can see how they're all clustering around very close, right? So that's the level to watch. You guys want a sort of a higher level that like we looked at in the cash chart, I would say 68.25 would be the level to watch. If we can sort of consolidate above that, obviously we're in a very strong position. And if we slip below, then the area to play would be the 68.24 to 68.40. Okay. That's for the continuation chart. Take a quick look at the Dow. Very clean in the sense that we went right up into the quarter square, reverse, couldn't really hold above it. Reminds me of, like sort of like the move here. Same deal, when we talked about all this last week, we talked about this 47,162 being the key level. And you can see how we pushed against it. So that was a really important level. Whatever was hedged there, whatever the gamma was there, whatever it was, the news just blew right through it. I mean, it would take that kind of a move to get through. And we spent the last couple of days digesting all of that. So let's see what happens. After the weekend, we get to digest more of it. But I'll tell you that this 48,346 is a key level to watch. Remember, all of these we're looking at sort of three levels. So like the really bullish scenario would be to hold about 48,346 for the Dow. If we can hold above that, obviously we can probably grind and test a little higher. If we get below that, then this 47,000, 162 level becomes the support level to watch. Yeah, so that's it for the Dow. I think the theme here is really okay. We moved higher. We came off of the corner. Now it's really a matter of watching the counter trend, right? Now, what's the quality of the counter trend? And you can see I had drawn like a buffer like back in the day. If I extend that out, it's pretty much where we went up and stalled. So this is a really important area to get stalled. Obviously, we don't need that buffer. If you just look at the pattern, you can see all that overhead stuck on top. But just saying that's where he stalled, right? So the point there is there's a lot of overhead. It's highly likely that we flip around and trade lower rather than higher. But if you're going to go higher based on this chart, the real confirmation would be about 897. Obviously, if we get above that, highs are just around the corner. So it's not, we're very close and the whole scenario could be changing. All right. Based on this continuation chart, I would say the sort of the balance point here is 67.53. And if we can hold above that on any kind of a pullback, we're kind of we can get stabilized and, run a little higher. If you slip below that, then, now I think the script is going to flip and it's going to set up maybe even a down month. If we take out this secondary level that we talked about in each of these charts, it could set up a down month, obviously, because that would have been the big deal, right? They're pushing up right up against that resistance. And 6610 would be sort of gravity that's going to pull it down to, pull it down. Again, we'll see if we get there, how we hold that. We have a huge range here. So, just like in this quarter square, we spent, a couple of months. So between this high and 6610, we have a quarter square. And obviously we could spend some time spinning in here, which would validate the high because we haven't gone higher, and kind of validates the low because, we haven't taken it out. But we'll see what other cycles are hitting. Ben was just saying how the lightning cycle hit on Friday. So that could easily trigger some
We
kind
yell
of a
cycle.
treble yell. Sorry.
Yep.
When is the next lightning? I like those. They're pretty quick.
It's coming. It's coming.
Yeah. So Rebel Yell is also very good for much bigger moves. So if that gets some traction, then we'll start to lose these levels, and then we know what to do. And these levels, obviously, once we lose them, they become resistance. And you guys are watching for us for a while. The game, right? That's kind of how it gets played. Okay, I think I covered everything, and I try to do it a little bit faster to keep everybody happy. And thanks for all the feedback from last week, you guys. It was really good. So we're going to go back to the weeklies and do those and continue the show pretty much how we did it. But I'll try to, cut down on the chatter, extra chatter, right? I mean, there's some talk is the whole point. So I'll try to do my best. All right, we're moving on to the weeklies. Here's the cash chart. So like I said, the inside bar, I don't really count. So we had a down bar inside, then we had the one bar counter trend going pretty much into the middle of that expanding triangle. We were kind of mapping out on the weekly. And, that's usually in a normal pattern, that's where you tag and
And
roll over.
reverse, right?
Yeah, and reverse. So that's
Mm-hmm.
where we are in a weekly. That's that. Not very complicated. And if we go back to the circle weekly chart, weekly circle chart, we are tapping a one by one coming off the high, practically to the tick right there. Again, that's important, right? So a lot of things came together at the high. We pushed up, and yeah, we can say it took Thursday and Friday to digest everything, but you can see how everything stalled out pretty much where the big resistance was. So, and last week we talked about the 50% level. You can see how we stopped exactly there. And the whole point there was, if we can get above, okay, we got a little bit work to deal with. If we flipped over and we traded lower, well, the 50% held, and the pressures, we have a much greater pressure. And to uncoil that, it could be a slow motion down move, because it's anyway, that's my take. So I think what we do up here next week's going to be pivotal. It's going to be really important what we do, way more than down here, because we had the levels were very close at hand. It was easy, right? So here we can't continue. A lot of things will show up by next Friday. So we'll pick that up next week. Well, the biggest things I can talk about is really the one by one, and we saw that the one by two hitting on the daily chart. So we have a few things happening, and that's it for the weekly. Take a quick look at the 30-minute. We both post every day on X, so if you're not following us, follow us there. Links are in the description. Ben posts a lot on the Nasdaq and all the other charts that he follows. I'm only basically posting on the ES. If you guys are interested, follow us there. And if you guys like our work or any part of it, please remember to like and subscribe and hit the alerts. Getting back to this week, we opened up at the 6620 level. That was sort of the key. You can see all the lines that were here versus how we have a reduced amount of lines up there, up above, basically because we really didn't have anything. And you can see how once we broke, we just took off. So 6620 was the key. We came into Monday. The first thing I saw was an expanding triangle. We talked about how, this is where all the fake moves happen. Sort of expected, both sides to be taken out before the final move happened. So what happened? We went down, took out the lower part of the expanding triangle, sort of the megaphone, right, pattern. Came back higher low, and we blew through everything. 6720 got taken out. Great. And the next level we were focusing on for the whole week was 6794. And the idea was, we had to hold above it. And if we can hold above, it's in a firmer ground to move higher. So basically we did that. So we stayed pretty safe through the sort of the sideways move and got above 6812. We broke that trend line and moved up on the 9th. And then the focus was really, can we hold above this high on the 8th, right? So that I was thinking of, that could potentially be a false break over here and then turn down, but we didn't. Instead we took it out, and here's a retest. And after that, we basically managed to stay above that. So everything was pretty safe. Didn't quite get to the upper level that we were sort of watching at 6893. Let's say 93 to 6900, that's the zone we were watching. We didn't quite go and tap that. That's all right. So for next week, we had that as resistance. Let's just round it up to 69 and 6812, 6794. This is where we have support. But I would say, the way we got pressed into this, the 6847 is going to be important. The first clue, if we get through that and can't really make any headway and start stalling out, well, I would look for weakness, especially if we're doing a lot of that price action below that level, right? So that's going to be a key level. And if we get above 6,900, great, straight on, right? Bulls are in charge. Otherwise, this 6846 is going to be sort of the balance point. I think everybody's seeing it by now. Let's just continue to watch that. And for big moves downside, 6812, 6794 are the layers we're watching. But you can see that's going to be sort of the pivot, right? We'll watch that as a major point. Okay, let's move on to the rest of the pack. We have bonds here, not doing much. I would definitely not bullish. Okay, we talked about it before. There's 116 and a half, 116.15 area. This square is 45 down from the highs from last September of 24. This level is really the sort of the balance point for us, and below that, it's just weak. Bonds are there's a higher probability of it going lower than higher for a sustained move. So we just had to count out the time and wait for that. Some support here. We've tested this already. It's on the 111, 110.26 or so. You can see the lows back in January of 25. May of 25, we tested that level, which was already there before, right? This wasn't put on because those lows, because they all came in exactly on the 50%. So there's a good chance we test that. But now that we have sort of a double bottom already sitting on this line, if we take this out, and we have plenty of overhead now, and we could easily get pushed lower. So watch out for that. And there's nothing bullish to talk about right now. Where if you take it to two lines, we're right smack dab in the middle. So not a whole lot to talk about. We're just looking for direction. Weekly bonds, 114 is really sort of the bull bear line on there, and you can see we poked. We kind of poked at it for 3 weeks. Tried to make some headway, but you can see just the wicks are sticking above that, and easy to see the overhead. So again, it's not looking amazing until we come up and retest this and then move. So here's a good example. We came up, retested it. So this move you can actually trade because it's coming after the retest, and then we have resistance. You can trade the player down. So right now we got below the level, and now we're retesting, right? So watch it. It's looking a little weak. Guys, I forgot to check on the Russell because we have some Russell 2000 fans. And here we tapped it last week. 2617 was the key level, resistant level for the Russell. And we managed to get above it on basis of weekly. So if we can hold above that next week, 2617, we can hold about 2617 on the Russell next week. I would say, we're really in a strong place. And that was just sort of a test, and we immediately reversed. And to be stuck below that again, then everybody got the email, and we're going to probably trade lower. So anyway, looking at crude, we were talking about holding above 97 is sort of the 95, 97 is the key. We had the full square about 96. This is really the battle point, and last week we talked about that, and we ended up bouncing higher. And we talked about that line pretty much like we talked about 91 and some of these levels down here, right? So above 65 with the accelerators, we got that. And now we're trading the same way. So for next week, we're going to focus on that, 97. And 91 is still important because remember, on the way up, 91 was the level, as long as we're above that, we can easily test 97 and like 1, 2. And the third step is taking off. So up in here, the engines are warm, it's not revving. Above 95, 97, the engines are revving. So you could easily move very quickly from there. But 91 is the engines are still warm, right? So keep an eye on that. Like you can see, we even that big down day, we came up and tapped 91 exactly before we bounced and got above that 95, 96 level. We haven't managed to hold above the 50% level, which is right around 111.75 3/4, but let's say 112. So 112 is really the level, we were really heading up there before the news came, and we traded lower. But above 91, nothing's a done deal. Above 95, 96, the full square level, things can really get moving. So moving on to the weekly, we're getting, we got pretty close to the highs we had in 22, and which is 130. But the important thing is coming off of that, this 94 level, we're basically above that, So basis the weekly, nothing really, there's nothing bearish in here. It just looks like we're buying time, and support looks pretty good. So I would say this 96.40, I would use that. The 96.40 level is the level to watch. If we maintain above that, like we have been for the last few weeks, the crude's in a pretty strong position to move. So let's take a look at the other oil chart. This one, we're a little bit below. We had the 60% level is like 97. And most of the time we were there, but last week, by the time Friday came around, we got a little bit below it. You can keep an eye on that. You can keep an eye on both. They're coming from two different places, and you just have to see where the traction is. So I would say, since the low came in, we're coming off of this. Watch that 94, 97. Watch them both. It'll give you a good framework to look at these crude markets. All right, moving on to gold. We we managed to hold above the 50, the full square, 45.70. Managed to hold mostly about 47.50. So I think, this put the highs in, had a counter trend, the lower high corrected, and if it feels like we're still correcting, and I think the level to watch is this 45, sort of 45.60, 45.70 level. If we, long as we're consolidating above that, I think we can easily move higher.
Yeah, it
For
looks like
now,
that ABCD was good. The down ABCD.
this one, right? ABCD
Yeah,
here.
yeah.
Yeah, that looks good. Yeah, let's see. But it just feels like, because of the volatility that came in, we have some time to spare, time to burn out. So we might consolidate up here. And my point there is, long as we're consolidating above 45.60 or so, gold's in a positive footing, right? We could easily move higher, and much stronger gold if we can hold about 47, 46, 47.50. If we can sort of manage to hold above that, I think the upside would be the push for day trading or short term. That's watching that. Let me do the metals together, and I'll do all the weeklies for the metals at once. Getting back to silver, same thing. It's sort of stuck in our range. We have 72 here and 81. We're right smack in the middle at 76. So not much to do, guys. It was fun while it was moving. Now we have to kind of really back off and choose shots. So I would say to take those shots at the key levels. We're kind of in the middle. Let's see if we stay here, fine, let it consolidate. If we get down to 72 area, look for it to hold and move higher. If we slip through it, obviously we're gonna move lower towards the 50% level, 2.5. Up above we have 81. Copper was bullish one on Friday. So here we talked about the 565 last week, or we've been talking about it since that's the key level, and we managed to get above it last week, and come up and tap the full square. So that's 588, 589. Pretty good. I would also say, the high came in, consolidation, and kind of flushed the lows. So all the patterns are there. Like this is, we're done with it. We're done with the correction. How can we confirm that? Well, I think obviously one will be getting about this 588, 589. The other one is see if counter trends hold above 565, right? If we can hold above that, I think copper's in pretty good shape. Trade that side. Moving on to the weekly metals, let's take a look at gold. 48.15 is the key level we're watching. Once we get above that, I think the weekly is going to be sort of pumped up and ramped. Up until then, this entire range, as you guys can see already, it's become sort of a consolidation, and we're above 43.91. Weekly's in great shape. It's a weekly, so takes a lot of bars to make sense of it. And so 43.91, 48.15, that's sort of the range, and you can use 45.98 as a sort of a balance point while we're correcting, right? If you want that kind of a frame. Weekly silver, we did pretty well. The 50% held. If not, we definitely came into 3/8, which held nicely, and we pushed up every week. So it's looking pretty good. It still feels like it's in the consolidating phase just because of the volatility and the pattern that's coming out. So what we have to do is watch for the counter trends, right? So here, last week we held above 5/8, which is very, very good. And now if we can hold above the quarter level, 74.50, let's say, silver's okay. So let's watch that. So I think we have to watch the 5/8 right around 69, sorry, right around 70, which is pretty close to 72 on the daily, but 70. And so 70 is the 5/8 level, and we have that support, and we have the quarter level at 75. So long as the counter trends are above the low last week, I think silver's okay, and we can kind of watch the quality of the consolidation, right? Correction. Copper went and tapped 593, which was a 50% level, and we'll have to see. We'll have to see how it does next week. But for now, that's resistance, and consolidation's holding about 566. I think we're in pretty good shape. Yeah, if we get above 593, great. We have a lot more to go. That's a good way to look at that. Okay, let's move on to the dollar. Well, dollar, we tapped, we tested the upper level, upper boundary, almost to the square. We had 100.5 was the resistance, and we tapped there for a few times and really couldn't do it. So now it came back, got below 99.50, where we got weak. Now, really, the big support is around 98, which was that old old lows and this ascending triangle high. If we can hold above that, okay, we can take another shot at it, or this could be a good place to consolidate before we move higher. Now, if we get below this 98, I think we have a little bit of trouble. So that's going to be a key level to watch next week. Moving on to the euro, well, we got above the 50% level, which was our big resistance, and we sat above it Friday. So, all right. So 1643 is going to be the 34 is going to be the level we're going to be watching. 1643 is going to be the level we're going to be watching. As long as we're above that, obviously we have more bounce power. Big time resistance at 78.98. So that's the upside for this. And we'll deal with it like that. If we get up here, that's going to be major resistance. We could stall out anywhere in between. Watch for reversals, but those are the key levels we have to watch. Let's take a look at Bitcoin. And then we'll have the weeklies, right? Weekly and the monthly today. The 68,580 was the key level that we've been watching, and you can see we've been crisscrossing it. So there's not a whole lot to do. But then it started to make the higher lows, started holding the lines, and anyway, last week we were able to manage to get above and hold above the key level. And then it started to pull higher. It can pull higher, but we have big time resistance starting right around 79,000, right? 79,000 to 80,000. So that's the upside. In here, we have enough room to play. Let's watch it closely. Let me jump to the weeklies. Here's the dollar. We had a pretty decent up move. And well, last week was a big reversal. Again, now the big deal is, can we hold above 98, right? It showed up on the daily chart. So here's a weekly buffer is 98 to 97.83. That's sort of the range we're watching.
And you can see the flow of funds because look, it's just the exact opposite of the indices, right?
Exactly. Yeah, that's
The
true.
the dollar's coming into support, the stock indices are going into resistance.
Good catch. Yes. So 98, 9.25 is sort of what we're watching for support on the weekly, the dollar. And for the euro, we pushed past that 1652, 1654 level, which was the 50% level. And well, we pushed. Let's see what happens. If we can hold above that, great. We have a little bit more time to spend above the square, 50% level. And if we trade lower, that's going to stick out like a little finger, and that could end up becoming a weekly reversal. So let's watch it. Most likely, it might end up becoming an inside bar next week, but let's see. But 1654 is the level to watch there. No question about it. And that rounds up everything that I wanted to cover. Let me put it back to you, Ben, and cover the rest of it. Coco's.
Yeah, excellent coverage. You can see how things got pushed all to the extremes, and now we have to figure out which way they're going to go based on how it handles the levels.
Yeah, and it looks like we got pushed so high up into the ceiling. We have resistance there, and we have some timing with the Rebel UL cycle. So, and we were up, 5, 7, 9 day correction. So we're up at the 9 day level. Well, NASDAQ looks like we're at what do we like 7/8
Exactly.
of the square.
Yeah, this week when I've been because I post the NQ daily, like a 60-minute chart for people that are trading that, intraday.
Mm-hmm.
And when we look at the daily, we said, okay, the key resistance is this 25,000 to 25,377. All this right in here. And you can see, where did we close? 25,333 right there at 7/8. So
Right.
we're watching, just like just like you had with the S&P and the ES, we are at the limit here. And are we going to keep pushing? If we do keep pushing, then obviously the next battle is at the full square. And if we get up in here, we're going to go make a new high, whether it's a next leg of the bull market or a false break type of high. That I think that's the question that we'll have to deal with once we settle above that full square if we can. For now, I think we're at the limit. You can see here the highs and all this overhead from when we were, messing around here for a few months, 3, 4
Yep.
months.
Yep. Yep.
So we're there now. Now this coming week, let's watch 25, 377 and then 25 as well. Because if we do reverse and get stuck under 25, when we look at the weekly, monthly, you'll see why that's a critical spot. So the most important thing this coming week is, can we settle above 25,377? If so, how do we deal with the full square at 25,720? If we do pull back, can we hold above 25? If not, we're going to come back and retest probably at least this 50% of the square. So that's the daily. Let's take a look at the weekly, monthly, and you can see why 25,000 is fairly critical, and the 24,000 here on the weekly. So on the weekly, we're talking about 25,932. If we push up there, that would be interesting because then we would be not only up against the 50% of the square, but we'll also be up against the edge of this circle, which is going to be pretty strong resistance. And you can see what happened the last two times we got up near the edge of that circle. So let's see if we do get that push. If not, 24,000 is a critical spot. We've had structural support here from the previous highs, and then here was a low when we were doing this distribution up here. So coming down, 24,000 is going to be a key level to watch on the weekly. Let's take a look at the monthly. Here's your monthly, and you can see we're up against the 50%, or in this case, this is the quarter square, and that's 25,402. Let's write that in so we have that as a reference. So that's going to be the next key level here on a monthly basis. We did print a higher high than last month, so it's early in the month, but we have a potential reversal setting up. Again, just like the weekly, the 24,000 level is pretty critical here. If we do pull back, we want to stay on top of that for the bulls to be in really good shape. And so that's the NQs. It's a lot like the ES and the S&P. We're at a pretty extended spot now, and we want to see how we handle this resistance. If we fail here, then we have to watch, okay, how does the pullback, how does the weakness transpire, and where does it find support, and what levels can it get through? And that'll tell us, what's going on next. All right, with that, let's switch over and go look at Bitcoin. Barry gave you a initial look at Bitcoin, and here you can see his key level was that 68,500 area. And we're at a key spot right now, the 73,561. It's 50% of the square. If we can push through and settle above, we'll finally clear that. We tried it here, we tried it here, we tried it here, couldn't do it. So we're trying again and pushing. If we get above and stay on top of that, then the full square at 85 will become the next target. That's where the pressure would be. So we're in a pretty key spot right now. So let's watch it and see if we can clear this 73,561. Let's take a look at the weekly. And you can see why this is a key area. This is in this block that we highlighted, as structural support and resistance. And we've been chewing through it, trying to get through this for a while now. 5, 6, 8 weeks, it looks like here. We've been in here just poking. Well, we're in it again. And now let's see if we can sit on top next week of 70,646. That will be the impetus to give us the push to go higher. So we're in resistance. We're in this overhead slash congestion area on Bitcoin now on a weekly. Now we gotta see if we can push through. Let's give you the view from the monthly. Here's your monthly. On the monthly, you can see the 74,532 is key. We're pushing up near it. It's the full square. We've crisscrossed it the last 2 months, which is why we, haven't made the trip down to 56 yet, because the bulls have been, still battling and still fighting in here. Right now, obviously, we want to get some. If you're a bull, you want to get some prints above here. So we'll have another month where we guarantee that we're crisscrossing and we didn't clear it to the downside. For now, it's an area of resistance. But Bitcoin has been rallying with risk assets, so it'll be curious to see how we handle these current resistance areas where we're poking right now, and see a lot will follow off of how risk does too. So it's kind of all one trade. All right, let's talk about the commodities. On the commodity side, we still have corrections going on in ones that we've been highlighting for the last few months. Wheat is still correcting. It's like there's an ABCD down in progress. Corn is still correcting, coming into support. Sugar has corrected pretty sharply, so I'm watching for a reversal there to bring that one back up as a topic to and an actionable idea. For now, let's go to the first one we want to look at, which is beans. All right, why are we highlighting beans and not the others? Well, the others are still correcting and continue to show weakness. What we got here in beans, starting in the middle of last week, is a pretty nice bullish signal, right? We came down, we were doing this sideways price action after failing at the full square. We came down pretty sharply right into support, started doing this sideways. Then we got this on Wednesday, we got this sharp move lower, which was basically a little false break here, right? We took out the low there and then immediately reversed, closed at the high. And then Thursday and Friday, we had daily reversal up bars. So we had a daily reversal on Thursday and up bar on Friday. So it looks like we've completed this little correction here, closed above 1170. As long as we can clear 1170, then we're going to go back up and challenge this full square from a daily basis. You can see the structure was good on this pullback. We got the false break. We got it right into support. So it looks like the correction in beans may have been completed, and we could be starting the next leg higher. Obviously, the next key spot is this full square at 1216. If we clear that, then we open up, beans in the teens, as we talked about. 1306 would be the next target. Let's see how it looks on the weekly. We made a lower low on the week and then closed at the high. So that's a very powerful bar. When you close on the high of the week after making a new low, it wasn't an outside reversal because these two were inside bars. This was the last down bar we had, but it sets us up next week. If we just print a higher high than the near the close, we'll have a reversal bar on a weekly basis. Again, that supports the odds that this correction may be over. Like you can see, we've had corrections along the way. Here was a correction. This was this correction. If we print a higher high, that'll give us a reversal, which would be a strong sign that the next leg up is going in soybeans. Let's take a look at the monthly here. It's early in the month, but you can see we did hold the low, held this 1131, which is a quarter square here. And let's see if we can get the push up above 12, and then 1275 is the next big monthly level we want to get above. So all in all, the correction in beans looks to be completed. We have the daily reversal. Let's see if we get a weekly reversal to go with it, and then that would signal that we're on the way higher again in beans. So watch beans closely this week. All right, let's go to the next one. Next one's cotton. And this has just been motoring along beautifully, with pullbacks and then reversals, pullbacks and reversals. You can see how we're just sort of stair stepping higher. This past week, end of last week, we were dealing with this 71 as resistance. We stalled last week, 2 weeks ago with, a couple pokes above. This week, we tried to push above, had a bar that came down, and then we reversed on Thursday and closed up near the highs of the week. So now we're testing this full square at 73.87. You can see it made a high over here in 2024 in September, October, and then failed. So we're going to have some work to do here. But let's see next week. If we get stuck here and pull back, let's watch the pullback. Again, you can see the pullbacks are all holding structural support. So the next one would be here, like just above 71, 71 to 71.44. But if we can get on top and sit on top, then we're heading higher daily basis in cotton. But just since this low, man, look at it's just beautiful price action. Let's take a look at the weekly. Here's your weekly in cotton. Another week closing near the high. Just nothing wrong with this chart at all. The next area of interest is the quarter square at 75.40. You can see that's where we topped out in that September, October 2024 period. So we want to see us, sit on top of that, and then full square at 84 becomes the next target, 84.53. But just a nice, smooth ascent. We're starting to pick up some momentum as the ascent gets a little steeper. So let's watch cotton. Hopefully we can see something like this going on. Let's take a look at the monthly. There's your monthly. We've already made a higher high this month, and we're coming up into this quarter square where we topped out. So this next week's going to be interesting to see how well it handles this resistance in the 74 to 75 area. But again, it's doing what it needs to do after breaking the downtrend line. We've got 2 successive months of higher highs. And that 45 high to low called the bottom for us, cycle-wise.
It's like a pretty good low, huh?
Yeah, I mean, all in all, the you can't complain about this cotton chart. I mean, it's just doing everything really, really well.
Yeah, yeah.
This week we got some overhead that we're going to be dealing with, so let's watch and see. Let's not be surprised if we get a pullback. But if the momentum is kicking in, like you can see, because of how the ascent is, steepening, we may pop right through it, sit on top, and keep going.
And this is
That's
a
what
good example of how the counter trends hold the prior levels.
Perfect, right? Perfect
Textbook.
structure.
Yeah, perfect.
Really nice. So the cotton trade is working out well. Let's go to a couple others. The last two we want to cover are a couple other softs that are early, but this is how we catch them. So let's take a look at first. Let's take a look at cocoa. All right, let's give you. We got to go through all the reasons why, because this is early, right? Major downtrend, right? We had
Yeah,
this huge run up to the high, and now we have this major downtrend. Well, it didn't stop at a random spot, right? It stopped on a full square. That's number one. There's your low
absolutely.
and a full
And
square.
we had some time there.
And we were 315 in time, 315 in price from this high. That
Hmm.
is a square out, right? That's that's telling you that there's a good chance that something ended there. Okay. And I saw that a few weeks ago and I said, hey, we'll keep an eye on cocoa. We want to see, if we make a higher low and a reversal. Well, we got that first push up. Here's your low, little false break, and look at the reversal we got. Now, if we take out this high, which again, let's give you the level, call it around 34.67, 34.68 in that area. We take out that high this coming week, then we have a low, a high, higher low, higher high daily basis after a square out. Now, aggressive traders can jump in here because you could say, okay, we have the daily reversal, which is why I'm talking about it. We have the daily reversal. you put your stop here, get in, and see if we're catching lightning in a bottle with a potential fast move here. The evidence is there, right? We're stopped on a full square, which in this case is I'm using a square of 90. We stopped on the full square. We squared out at the low. We have a high. We have a higher low. That's usually good enough for me. That's Cocoa daily. Let's look at the others. Now remember, we're early, so the others are going to be developing, right? It the bullish sort of pattern and bullish characteristics start with the lower time frames and then they work through to the higher time frames. And as they do, you get the momentum push on the lower time frames. But let's show them to you to see where we are. Here's your weekly. So we came into the low February, March, pushed up, couldn't deal with that half square, pulled back, and then look at the last week. We closed near the high of the week. So weekly basis 34.14. If you're a longer term trader and you want a little more comfort, wait till we clear that, sit on top of that, and then we go here. But again, look at the downtrend that we were in.
I was going to
Yeah,
say it's not just a great square, but it's also a great price long term.
yeah. I mean,
You know,
look at where this was the top of the range, that long like 6 year range, 8 year range in 2017, 18, 19, 20, 21, 22 before we had the big breakout. See that?
yep, you see that
So
for
there's
sure.
value in the market recognizes value in those prices. Now let's look
Kind
at
of
the
getting
monthly.
primed here.
Yep. Here's your monthly. Monthly structure is interesting here, right? And this is what I was talking about. We pulled back to the highs from this long consolidation. And I dropped that line so you could see that. Monthly basis 3600's key, but if we can clear it, you can see why. For years it was tapping up there and just couldn't make it. If we can get on top of 3600, that's really bullish because then we're sitting on top of all this. But the key right now is to watch the daily, and there you can see.
Mm-hmm.
Any other comments you want to add in here on Coco?
Well, it's time to trade, man. Coco,
Yeah, yeah.
it's definitely time to trade it. Yep, yep. I
And
think,
this is about right. This is not about certainty. This is about odds. What we try and do at these lows is we see, can we stack up enough evidence that gives us a good chance that, yeah, we're going to catch a decent move higher, and that's why we're focusing on this one now.
and the other thing is, it's not like we're buying this low and then not looking at the market. What you want to do is take the bull campaign and then trade it. You can buy the pullbacks, buy the counter trends. That's what we were talking about earlier.
Right, sell
And
it, take profits into resistance. You
absolutely,
manage it and take, just pull money out of the market that way.
yep, yep.
All right, let's take a look at the next one, the last one we got for today. It's coffee. We caught this little leg here, made decent money on this leg up, and then we said, okay, we saw that we ran into resistance. We started pulling back right into this structure here and said, okay, let's see what happens. See if we can get a higher low. Well, here's your low, there's your high, and then lo and behold, on Friday we got that daily reversal. Closed at the high, daily reversal. Again, this to me it looks kind of like this structure here. Although this was a cleaner, one ABCD down, and then we really went. Here we went up, and now we've pushed down in a little more sloppy way. But there's the reversal, and you can define your risk pretty well against this low and see if we get the next push up. If we get this next push up, if we get above 300, then that means all this is sitting below us, and then we attack this, then we're really going. So coffee, I think, again, is back on the radar for me, and I'll be watching the price action early next week to see about getting involved there. But let's look at the weekly and the daily. I mean, the weekly and the monthly. There's your weekly.
And that 50% line just happens to be there.
Yeah, it kind of likes that line, doesn't it?
Mm-hmm.
And that was the low, and this was the false break, which gave us that nice move higher. Now we close near the high of the week. Weekly basis 305 is the key. Right? We get above 305, we can get that push through here and up into 330 to 350.
And that little false break, higher low.
Yep. It's all like stacking up again.
Mhm.
Let's look quickly at the monthly. And this the monthly again just shows, why these lows came in, right? This was the high back in 2024. So the market was testing it here. It held, and we had a big move to the high, and then had the false break, pulled back, false break here at the low, testing this high again. So again, is it a guarantee that we're going to go shooting higher? No, but the odds are stacking in your favor. When support holds and you have a false break, it's kind of setting up for at least a test, right? At least a test of that previous resistance, which is going to be up at 332. But again, let's focus on the daily. I mean, if you drop down to the 4 hour, you can even see it better, or shorter time frames. But we had the low, first push up, higher low. So now we want to see, can we get a higher high and really get this thing going? These kind of moves, right?
Mhm.
That's what we're hoping to catch. And that's it. That's it for the commodities. Nat gas is getting down into an area of like longer term support. So that's on the radar. We're going to watch and see what happens with that. But otherwise, just let the corrections play out. Money is definitely coming into the commodities, and we just got to be alert and see when the setups are there. But good job today, Barry. I think we know that we are at a stalemate and peace talks are happening, and now we're just watching to see which levels give way to tell us, which side's going to be the aggressor because it's coming. There's no doubt about it. So take care, everybody, and we'll talk to you next week.
All right. Good job, Ben. We'll see you guys next week. Check the links and maybe join us on X. Be nice to see you guys. And if you guys have anything to say, feel free to comment and let us know how we're doing or how we can improve things. Bye bye.
Bye.